In today's video, I'd like to show you a very simple yet effective way to play some of the post-earnings moves in your favorite stocks. Now, towards the end of this video, I'll show you how the setup actually looks like in IBM. But first, let's go ahead and set up our dashboard for tomorrow's trades. So using Zacks.com on July 22nd, which is tomorrow, we see that we have the following high-profile companies that are reporting earnings. So I'm going to go ahead and just make a quick comma delineated list here. So I'll say Microsoft, Tesla, Align, Kinder Morgan. We can add in new residential, HCA, maybe CSX. You can add in as many or as few of these as you'd like, and we'll go ahead and copy paste this entire list here. Come into our dashboard. You can have up to 30 symbols in your portfolio at any given time. So if I go ahead and add these, you'll notice that we very quickly have our volatility box levels for each of these stocks. Now I can switch all of these over to our conservative levels. The conservative is the volatility box levels that we use whenever we have a high catalyst event like earnings. It gives us more confidence, gives us at least wider room to expect for at least the post-earnings reaction for this increased volatility into the markets, and it gives us a really nice place in which we see price action typically start to reverse from, at least hitting our first target. Now the way to read the dashboard is quite simple. You'll notice that each of these stocks, so if I go ahead and say pull up IBM, which is the one that we're going to use for today's case, on the conservative, we have our LE levels, which are long entry, that's at 127.05. Our long stop is outside of 126.48, and our long target is at 127.62. And just like that, you have an instant framework in which you can start to look at areas or at least zones where you expect price action to start to reverse from. So if I show you what this looks like on IBM, so let's look at the charts of IBM here. I have the conservative volatility box plotted, and these are the same dashboard levels, but using the indicator version of it, which again, you can generate as many or as few of these as you'd like if you prefer to see this on your Thinkorswim charts. Now the actual setup came when price action breached our volatility box edge, which is our long entry line or the beginning of these clouds. That came right here, where if you remember, our level is 127.05. If I bring that in just one more time, you'll see that 127.05, and that became the entry. Now the actual setup with the volatility box is quite simple. We're looking for a breach of our volatility box clouds, which the cloud is the beginning level, that 127.05, the LE level, if I show you that one more time, 127.05. Once we get that breach, we're looking for that breach and then an edge signal confirmation, which is this green arrow right here, letting us know that, hey, it's safe to enter. Once we get that, the trade is a go. We're looking for an entry at the clouds or better if I get rid of this. We're looking for an entry at the clouds or better. Stop is outside of the volatility box, and our first target is at the gray target line. Now, once we hit that first target, we adjust the stops on the remaining contract shares, whatever you're trading, to break even, which is the beginning of the clouds, and we're looking to see how high is high. In the case of IBM here, you'll notice that price action continued to fall back to our clouds instead of doing what a lot of stocks typically do, which is start to reverse from here, giving you a really nice entry point for the rest of the day where your risk to reward also made sense on this trade, where our risk here, if I do measure this out just in terms of a dollar amount using the trendline tool, your risk there would have been something like 58 cents to try and play a move which typically gives us much nicer rewards where we see 1.5, 2.5, sometimes as great as 4 or 5% moves from our volatility box levels, which again starts to give you some really nice home run trades along with some really nice first target opportunities where you can take profits off when the market makes them available to you. Now in the case of IBM here, one thing that does stand out, which is a concept I've talked about, is the idea of retests. So with IBM, we had price action breach our volatility box clouds. We had the edge signal. We didn't get a retest of the volatility box clouds before we ended up hitting our first target. Then once we hit that first target, we had price action again, breach our clouds one more time. This was our first retest, if you think about it that way. Now, this retest also ended up hitting its target, but isn't a valid trade per our trade plan rules. It's much more aggressive, but if for some reason you were looking at IBM as a place that, hey, you were interested in trying to play the earnings move here, or you had another reason in which you were just overall bullish on IBM, then that retest may be a reason in which you're getting a little bit more aggressive and using the retest as a means of support. Now, I've also talked about this in previous videos where that first retest is the one that you may want to play, but once you get that second retest after you've already hit your target 2 times, that second retest doesn't really give us that same opportunity, right? With this third retest here, you'll notice that price action continues to now drift outside of the clouds. We have a few different things working against it. Not only is it the third time that we're seeing price action breach our clouds, we're also seeing that it happens after that 10 a.m. mark, which is typically where we see lower probabilities in terms of reversals. So that's a second strike there. And in the case of IBM here, we see that price action now just continue to drift down lower, where with price action ending the way we did, we see that the sellers have full control here, and we really would be looking at this on a more bearish trend. All right, so hopefully that gives you an idea of how you can place some of the post-earnings moves using the conservative volatility box levels in your favorite stocks. We have some key names coming up tomorrow along with the rest of the week into next week, so hopefully the setup starts to become something that you can rinse and repeat every single time and have a fairly easy process-driven approach that you can follow along with the dashboard to generate these levels much, much quicker. For those of you that do have access to the volatility box tool, you can also do some homework in terms of just familiarizing yourself with the stocks that have earnings the next day and then just keeping an eye out for those on the conservative scale on the live scanner, which again automates much of this for you and tells you exactly where setups are taking place. All right, take care, good luck trading, and we'll see you in the next update.